Hi guys, um, welcome to today's class. So we are going to be continuing from where we stopped. Uh, we stopped at accumulation, distribution, and manipulation, which is the power of three, which is also referred to as AMD. So, according to the last class we did, I said that accumulation is also refers to as the ranging or the sideways market. So when the market is ranging or when the market is sideways, is referred to as accumulation phase. So when it accumulates, then there is going to be an impulsive move to either the upside or to the downside. So after that impulsive move is what we call the manipulation. So it's not the manipulation is not the original move that we are expecting. It's just like a compensation for the for either the sellers or the buyers. I spoke about this in the last class, so but I'm just trying to brush it up. Then dive into um, we dive into PDRA. So after an impulsive move to the downside have occurred, we are expecting an opposite movement. We are expecting the market to move to an opposite direction, which will be referred to as the original distribution phase, which is the original movement of the market. So that manipulation phase is mostly referred to as the compensation to either the buyers or the sellers. So um, so this distribution phase is when orders have been executed for the sellers. For example, if it's a sell executed for the sellers, then the buyers can come in from here and shoot to the upside, giving a distribution phase. So this mostly occurs in the market. It's very common in the market. When you check your charts, you are going to see a lot of example of this kind of movement. So it accumulates and breaks out support and resistance. Traders or price action traders will refer it to as a breakout or a fake out. So after a fake breakout, then there will be a retest and an impulsive move to the upside. So this is how it works. So the next thing we are going to be doing is we are going to be talking about the PDRA. We are going to be talking about PDRAs. So I would really advise you guys to always be jotting things down so that you won't forget whatever thing I'm teaching. So I'm also going to be making this video available on YouTube, so whenever you want to check and practice, you can go to YouTube and watch it and rewatch it whenever you want. So yeah, so we are going to be talking about PDRA. What is PDRA? PDRA is an arrangement of an arrangement in ICT that deals with that involves premium and discounts. So for example, there is a tool we use to identify the PDRA. Let me look. We are going to be using our GAN box. For the identification of our PDRA. But you can as well use your fib tool for the identification of your PDRA as well. So either ways, it really depends on how good you are identifying, or the numbers as well. It all dials down to the numbers, and the numbers are quite identical. So as you can see, I'm coming. As you can see, the number on the fib tool is more is more compared to our GAN box. So but the GAN box is originally used for the identification of PD arrays. You can actually set it. When you double tap on the GAN box, it's going to take you to an area in which you can set whatever settings you want to set. Over here you can change color, you can do whatever thing you want to do. When you double tap on your flip tool as well, you can change whatever settings and just copy this my settings that I use on my flip retracement tool, and you can also copy the settings on my GAN box as well. So um if you look at my GAN box, this particular place from our 0.5 to our 0 is what I identify as, I refer to it as my premium zone. My premium zone. This is my premium zone. This is where I identify as my premium zone. Then these other lower parts from my 0.5 downwards to 1, I refer it to as my discount. You can, and to for you guys, you can actually just flip it either ways. It really depends on whether it's being up or down. It really depends on how you put it, but normally it is done like this. It is done like this from 0 to 1. So I actually just flipped it either way. So just make sure when you are drawing your gang box, start drawing it from 0 to 1, not from 1 to 0. So I just want to clarify this just in case you get confused. So you can, when you are doing your flip tool, when you are drawing your flip tool, draw it from 0 to 1, not from 1 to 0. So from down to up, not from up to down. So from the bottom to the top. So the top part is what we call the premium, and the downwards part is what we call the discount. So we mostly take our buy orders from the discount zone. We take our buy orders whenever the market comes to our discount zone. We buy. It's expected that we buy, and whenever the market comes to our premium zone, it's expected that we sell. So for instance, the market is moving like this. I'm coming. So for instance, the market is moving like this, like this, like this, like this, higher high, higher lows, higher highs. Then it comes to this place and then taps into the air, then goes to this place. So now it's expected that whatever kind of sell or whatever kind of trader you are, is expected that when you see something like this, you know that okay, yes, this is only an opportunity for a sell, not a buy. When you tend to buy from this zone, when the market comes to this zone like this and you tend to buy from this zone, you are taking a very big risk, because there is a high chance that you are going to be liquidated, or you are going to lose the trade. So it's expected that you take your sell trades from this place. There's a possibility that the market might just decide to go up a little bit and clear this liquidity, then go to this place and probably create another liquidity here, then go to this place, probably a fair value gap or an order block, then tap onto the order block, then dump down to the downside. So it's expected that you you are careful on the discount and premium and discount zone, because it guides you through taking trades. It guides you when you are taking your trades. It gives you a clearer picture of what the market is doing, and you can the easier way of doing that, to act easier way of you identifying either the market is in a discount or premium zone is when you carry your gang box, you make sure you set your gang box to the previous low. I'm talking about the low of your macro structure, but if you are a lower time frame trader, you can also use your lower time frame to do this. So it's expected that you use your lower low of your macro structure, then the higher high of your microstructure, the swing high or the swing low of your microstructure. Let the points meet. Let the points of your swing high and your swing low meet the top and the bottom of the gang box. Then you draw it, and it's expected that you, whenever you are taking your trade, it should be around the 0.78, 0.71, 0.61 and 0.5. Don't take sales from the discount zone. Do not take sales from your discount zone. Let me even color this well. So that you can understand well. Let me color it to be, let's color it to a red color, because we are all used to sell and buy as red. So do not take your sell. Sorry, I made a mistake. Do not take your sell. Do not take your sell from. Do not take yourself from the discount zone. Do not take yourself from the discount zone. You are setting yourself up. So it's expected that whenever you use your FIP tool or your gang box, it's expected that the market should be around the premium zone first before you think about taking yourself. And same thing goes to the vice versa. Same thing goes to the discount. Whenever the market is in a discount zone, okay, for instance, now let me give an example. When the market is moving like this, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, it's expected that whenever it enters a zone like this, it's expected that you prepare yourself to take in buy positions only. Take buy positions only. Forget what the market, whether the market is dancing around or is feeling like it wants to sell. As far as you've marked your valid swing low, just make sure you look for an entry to take your buys. And of course, there are a lot of confluences that you need, and there are a lot of things behind this, but I'm just trying to make you understand the zones. So whenever the market is in the premium or a discount zone, you know what you are going to do. So this helps you to manage your trades well, and also not to counter trend. It's very important. Helps you not to counter trend. So people also refer this premium and discount zone as our supply and demand zone. So for example, this is what we call our supply zone. This is what we call our supply zone, and I'm going to be identifying it as I'm going to be marking it out and identifying it as our red color. Sorry, I don't know why. I'm coming. We are going to be identifying this zone as red color. Same thing we did with the with the discount zone and the premium zone. So I don't know what it's. Okay, since we are done with since we are done with the premium and discount, I think my laptop is misbehaving. So since we are done with the premium and discount, I'll just stop here. Then we continue um we continue on our next class. We continue the supply and demand on our next class, but it's pretty much the same thing. It's pretty much the same this pretty much the same technicalities behind it. So yeah, so if you have any question, do well to ask me in the class. And yeah, for those who are watching on YouTube, do well to drop it down below as well. So I'll see you in the next class. Peace.